says here, Judas swing, high, right? But we are filling the fair value gap. Bullish closure on the fair value gap there. Let's check on YM. Same exact thing, but a little bit more bearish. Yes, definitely more bearish. You can see we're basically only filled 25% of it. I might want to reverse now. Now you can see the original consolidation in here. Could use that as a sell side draw. We do have a dealing range in here. So if you were to look at the 1 minute, the high point, I guess you could also use this high point to low point. Now whenever you have a reversal, you're going to be targeting the opposite side of the liquidity. So technically this down here is what you would target. The only problem is we did, actually no, we should expand down to here. I feel like this is a solid draw, and you can see starting to expand lower with the 10 a.m. news. So retracement, stage of delivery prior to 950 macro becomes low probability. I want to see the swing low now as the target. So now you could use these inversion for value gaps, order block. Might get some respect of the order block if we close below. So now this old selling, once we close below this old selling, you'll see speed. So watch this order block in here. The low end of this order block. Okay. If we form a candle, if we close up above it, that's fine. But as soon as we put a candle body below, you'll see maybe an IO fed quickly. So you could use the inversion for value gap in here as your entry point. So if you want, you could wait for the. I don't think this fair value gap will fill, to be honest. But take profit all the way at the low. And if you wanted a large stop loss, you could put it all the way up there. I don't think we'll fill that, to be honest. Preferably this is mostly left open. So this gap in here mostly left open. You can see the nice expansion lower. About to get 20 points from there, so look for the 20 points from here. Smash through the 20, we're already at 400. Now look for New York AM low. I'm still looking for 14,847 as the take profit. Could take also one off from the 932 swing low. That's also fine. So you can see we also closed below the old selling in here, right? So preferably you don't see a candle body that's placed back above this order block. Here comes the sell side. Can move stop to break even. So I'm moving stop to, there's a gap in here. Let me move some of this clutter. This gap in here I want to see mostly left unfilled as well. Breakaway gap. Close below the old selling, breakaway gap. Makes sense. So wait for this to fill out, and then I'll talk about external range expansion. What did I say about the retracement stage, right? You wait for after 10 a.m. You wait for that stage of delivery, and then use that as your entry point. And here comes the sell side. There you go. So there's the fill. Sell side liquidity, bagged and tagged. We'll look at the execution labels really quick. Pretty standard stuff, if you ask me. 14,811. I'm still looking for 14,811. So watch this swing low down here. Okay. So nice entry off of the order block, inversion order block in here. So this becomes a selling order block. And look at the respect of those candles there. So we close below the old selling. So this is a market maker sell model technically. Very rough, but market maker sell model. Close below the old selling in here. Close right at it. Close right at it again. That's where I entered. Close below. Did not ever return back to this order block. Close below it here. Look at the old selling from here. Order block. Came up, wicked into it. You could use that as a selling point. But then look where we left above the order block, a breakaway gap. So if anything, you would see an IO fed into here. But no candle buys placed above the order block again. Old selling in here. Old selling in here. Right? So if you want to take this out, close below with this candle, no closure above, swapped into sell side. So once you start seeing these elements of price, it becomes very, very clean of what price is supposed to do, right? It's just on a script. You just learn what it's gonna do on the script, and you can just take as many trades as you want, to be honest. But that was gorgeous. I agree. But okay, to the spiel. So still look for the sell side down here. I'm completely out of the position. Whenever you have a parent dealing range, okay, and you retrace into that dealing range, and it sweeps a lower time frame or subsequent dealing ranges high or low. So to put that in easier words, basically when you have a dealing range and you return into 50% of that dealing range, and at the same time on the lower time frame, there's a buy side or sell side liquidity pool, so an internal range liquidity pool, you'll see external range expansion. Okay, so external range expansion, I would expect that this sell side liquidity down here is hit. We also have a reversal condition at 10 a.m. So you would see 10:30 as a continuation. Anyways, so to make that simpler, if we look at this parent dealing range in here, I'm glued to price. I want to see it run down. Okay, you know it's going to run down and there. Anyways, high, or you could use this high if you want, to low. Okay, that's your dealing range prior to the equities open. If you want to use the London high, that's fine too. Okay, if we go to the 3-minute, high to low, right? We retrace into premium. So a dealing range retracement on the parent dealing range. So the parent dealing range is this larger one, okay? Subsequent dealing ranges, if you drop into the 1 minute, there's a tiny dealing range in here, tiny dealing range, you know, things like that, okay? Parent dealing range retracement, meaning back into premium and into a fair value gap with a lower time frame run on liquidity. So that's your parent dealing range retracement, lower time frame run on liquidity. What do you have? Buy side liquidity here, buy side liquidity here. Ran it out, reversal. We close back below here, and then you expand to a external range liquidity. So you won't just expand into here. It's not going to happen. Okay. If you see an external or like a larger parent dealing range and we trace into it, and you swept out liquidity, you're always going to go further than wherever that swing low was. Now, don't take my word for it. You can go and backtest all these things, right? But from what I've seen for the past 2 days or 3 days of hours of backtesting, that's always what you'll see is if you retrace on a higher time frame and then sweep out liquidity on the lower time frame, you'll expand past the lower time frame target. So you're not always just, like in this situation, you're not going to just take profit here. I mean, you could. There's nothing wrong with that. Obviously, there's nothing wrong with taking profit here. It's still 30 points. Like, that's plenty of money. But you always will expect an expansion down into here. Now, you could also see this as your reversal condition. And what does reversal condition state is once you confirm the reversal, you're not going to time the reversal, obviously. But once you can confirm the reversal, it's always going to target the opposite side of the dealing range. So, in this case, you have your low to high, or low to high. Or no, high to low, sorry. High to low. Right? Swept out the high. Swept out the high. Reversed. Close back below. Where do you expect price to go now? To the low of the dealing range. Expansion quickly. Okay, so that's also why I'm fine with entering here. I know we had this large candle, but I'm expecting a run down into the sell side, so I'm fine with entering all the way up here. We're still, I think we might still be above. I got in slightly late. This return right into here would be perfect. Tap into the inversion for value gap and we're in premium of this dealing range. That would have been a perfect entry if I got it right there. I was a little slow to the draw, but you can see it's still decently around 50%, and you're expecting an expansion lower. So all those things in mind, I hope that made sense. I know it's kind of confusing, but when you have those things in mind and you apply time and price and the stage of delivery, it becomes very easy. It's all the same exact stuff, right? You can see it in here. Consolidation, expansion. Now expansion has two options. You have either retracement or reversal. We reverse and expand lower. Okay. Now I'm expecting either we just retraced back into probably a 2-minute fair value gap, 3-minute fair value gap right in there. Remove this stuff. 3-minute fair value gap right in here. So after retracement, we either see consolidation or we'll see another expansion leg down into the sell side. It looks like we're expanding lower. And obviously once we close below here, you'll see all of those, probably some speed below there. Let's look at the dollar. Yeah, so dollar dumping off, what does that indicate? Dollar and indices dumping off. Thank you, Demnex, pointed that out. This indicates low probability, right? Whenever you have, exactly. So whenever you have DXY and indices both doing the same thing, it's a low probability condition. So this breakaway served its purpose. So look at this now as a sibi. Now, you just want to see breakaways fill or be left unfilled until your draw on liquidity is hit, if that makes sense. So until your draw on liquidity is hit, you want to see those breakaways be used as breakaways, and all of the same rules apply. So once we see the closure below this order block, you don't want to see a return. Same thing with here. Once you get to the draw on liquidity, now whether it be this one or this one, I'm not entirely sure. I'm still favoring 811. Let's see if we can get the speed now. But yeah, once you pass those lines and you hit draw on liquidity, price can do whatever it wants, right? So you're either going to wait for consolidation, or we did leave a lot of gaps up in here, so I'm expecting some sort of retracement up into there. And here comes 4811, 14811. There you go. So screenshot this, add it to the charts. I'll put it up in predictions as well.